this is for the.
Mm-hmm. Okay. Hey, what's Hotep there, Brother Will? Yeah, I was trying to find out how I could switch my Facebook page. I've gotten a little turned around. And it actually looks like it works. Let's see what happened this morning in terms of, I think they had, there were some reports that came out. There were important reports that came out today. And let's see what happened there in terms of these reports. Let me see. Just trying to do get a page up here. Oops. Let's see. Let's go at 2. There we go. Yeah, because what I'm thinking is I'm thinking that more than likely you have a scenario where folks are kind of sitting on their hands with a lot of positions, with a lot of market movement. But let's go into it. Not to say that reports make the trade; they just may influence how people trade. Influence like market sentiment does matter. A lot of folks out there, some folks, well, I should say the tasty guys crack me up because they're always, they're saying that markets, events don't necessarily, you know, don't necessarily add too much significance to markets. I should say only Sosnoff says that. The other guys, they say it does because they do have a lot of fundamental analysis cats out there. But for me, it's like I used to say this when I was showing folks the forex. It's like a surfboard. You have think of being on a surfboard. Those waves will move that surfboard. So fundamental things that happen in markets will move that surfboard. But the bottom line is that it's gravity that like surfing is all about gravity. And you're actually falling, and the wave is just is just circulating. It just kind of reminds me when I was showing folks. I said, yeah, fundamentals do matter, but it's not like that's the do all say of a trade, because you may have an earnings situation where, like what happened to Ford. I think Ford beat earnings, but the price of the stock dropped through the floor. So I can understand that. Both sides of the question. I mean, both sides of the fence when folks say, well, earnings don't matter, but they're not earnings. Excuse me, that fundamentals don't matter is and they don't really how can you really trade it anyways? But then I understand that fundamentals do make market sentiment where folks are going to have a reaction. So it's really important. Yeah. So you had wait, no, that's Friday because non-farm payrolls ain't till Friday. So what is that? No, today is ADP. Yeah, that's right. So ADP came out. You had wow, interesting that ADP, the revisions, okay, went up. Apparently, they had a really good employment change. The GDP went down a little bit. Let's see, they forecasted up. So GDP went down, which is a quote unquote slowdown of the economy. Advanced GDP went down. We'll wait till pending home sales and crude comes out. But it's kind of interesting that what you're looking at is you had expansion of jobs, which is an inflation indicator, because the more jobs, the higher the inflation starts coming out. It should give their Fed reason to go ahead and hold and not cut. But then all of a sudden, you've got the other thing that kind of balances it out, which means that there's a slowdown in GDP. Okay, that there's literally it's not as expanding as much. So that's just interesting. I'm not going to say it's the do all say all, but it's very interesting to look at. And so we'll see if there's a market reaction to this stuff. Then you got Fed Watch. Um, you got, let's see what they're outlook is. Not to say that it's going to be the ultimate do all say all. It's just something to kind of say, you know. So yeah, they still got a week before Fed. They're before they start whether they're going to raise or lower. Again, it's so funny. It happens around election time. They're saying that they're a 25 basis point cut. They're looking. They say that a 25 basis point cut is a 94% probability, which is again more bullish for markets, especially before an election. It's quite interesting. Before is it before their election? Yeah, because is it? Yeah, that's next week. That's next Wednesday. So no, their election is Tuesday. So next Wednesday. Oh, it's right after their election. Interesting. I guess it's not a political move. I was thinking so right after their election, they're looking at after Joe Biden gets leaves office. So they're looking at again the cut, another 25. So it's not a 50% basis point cut because it's they're looking at 450 to 475 is that cut. Would it be a 50? Where's it at right now? Where is it at right now? I'm thinking that they're looking at a 25 basis point cut. But it's a 94% probability. Okay. Yeah. So the current rate is 475, and they're looking at 450 to 475. So it's a 25 basis, a 25 basis point cut, which is a little bit should be bullish for their markets. And I say should be. That's just the nature. Anything can happen. Nothing's guaranteed. So I'm just kind of looking at that, going, But when we look at markets, their markets, and I always say there, of course, just to see what we got going on here. We got our calendar trade, which is not really doing much on EEM. But I think November 1st is when we're getting out of that, because I wanted to only stay in 25% of the time on that trade. So, and we'll see if there's any opportunities out there for any new trades. My TLT never got filled. So that TLT trade, I've been wanting to get into that, but it looks like. So anyways, checking markets. So really things are still flat. So that GDP really didn't impact it as much. S&P is only down 10. Not even 10, so it's pretty much flat. VIX is, just a little bit up, so we're pretty flat. The cost of money, bonds, up a little bit, so it's up better than it was the last 2 days, so that's pretty much flat. I mean, you could always look at charts to tell where things are at. You just look at the chart, it'll kind of tell you. Has it really moved like crazy? So it's up a little bit better than it was the other day. So it's, it's still within a range of the last, 3 days. We could go to E-mini S&P, which is, see, equities still kind of flat. So things are kind of trading in a range. We can go to the cost of fear, VIX. And that's still trading within a range. So it's pretty much, everything's pretty much still, I think everyone's sitting on their hands, irrespective of inflationary numbers. They're sitting on their hands because of an election. A lot of portfolios, even though that's fundamentals, I'm not saying they're making their decision because of that. I think they're not deploying as much capital between that and non-farm payrolls. But I think it's more non-farm payrolls than an election. We could look at metals and gold and stuff like that, but that metals and oil, to me, are just directions of where a dollar can go. Not where it has to, but where it can. Oil, we look at oil. Let's look at oil. Let's do that again. Where's the chart? Yeah, oil is definitely, within a massive range. It's in the range within the last 2 weeks. Okay. Still going down. but in a range of the last 2 weeks. So it's hitting the bottom of that last range, at least the last 2 weeks. Last 3 weeks? Would it be 3 weeks? Yeah, or two. Let's see, yeah, October 1st. Yeah, the last 3 weeks. Well, is within the range of the last 3 weeks. It's definitely been trending down. So I guess geopolitical tensions, they don't care about what's going on in Iran right now. Let's go with gold. Gold continues to, shine, of course. They're looking at 3,000 gold. It is what it is. And as it starts going up, it gets more volatile. Again, commodities, you know. Let's go to financials. Financials, they're still kind of flat, ranging. They've been going up, so they're definitely on a bullish tear. So anyways, just looking at that, so I'm not really seeing any major movements market wise. SPX is still within that range that it's been in for the last week and a half. So it's like, it is what it is. So see if there's any opportunities. Inventory. Well, we're looking at our inventory, and their inventory is still kind of treading water. Nothing, super huge. It's still, kind of in the we're gonna see what happens stage. So Micron. Let's see let's see our deltas. Our deltas, FXI's delta, that's the only one I'm kind of like, okay, what's going on with FXI? But it's nothing major. We're still underneath that 15 deltas. It's moving down a little bit, and that's about it. I don't mind a market that moves down as much as I mind a market that moves up, because I hate having to defend calls. Defending puts is a lot easier when puts, when it goes against you on the puts. But so far, we're not. It's not paranoid zone. This is FXI, so it is definitely going down. Okay, it is definitely but it's not making me paranoid yet. When I say paranoid, having to keep the guy up on the top of the hill. He's going down off the hill a little bit, but I'm not gonna scream bloody murder yet. He is definitely looking like he wants to go skin. So we'll see. We'll see what happens. That's why we're short 8 deltas. We get short 15 deltas, 20 deltas, then it's time to start moving stuff around. So it's like, so we're about 9 deltas. Silver 7 deltas long, or 7 deltas short, so silver's moving down a little bit. Same thing with silver. He's moving a little bit down off the hill. He's not at the total top, but I'm not going to be paranoid yet. I think that's 8 deltas long. So we're just going to kind of sit and watch this for for the next few days and see what happens. Micron is still 2 deltas. EEM, that's our calendar. That is delta neutral, and so is XSP, the trade we put on yesterday. That let's see, we're not there yet. That was the calendar we put on. EEM, that's a double calendar. Micron, which was that iron condor, and I'm not really fond. See, he's going down off the hill. The hills, folks are starting to ski to the downside. So we're just gonna, we're gonna monitor that one a little bit. The only reason why I'm more paranoid of Micron than the other ones is because defending defined risk trades, in other words, with defense protection, is a little difficult. It takes more buying power. But we're only 2 deltas short, so it's not like the end of the world on that one. So inventory of trades that didn't get filled. The only one that didn't get filled that I know of, is let's see, all symbols. In the last day, the ones that didn't get filled is our friend TLT. I'm just kind of curious where TLT's trading. Because, it's just amazing that so TLT, we never got filled. We would have been in perfect position. So it is what it is. Man, because I really liked that trade. And that trade never got filled, so it just, and that's weird because there was gang loads of volume. Gang loads of volume on that trade. This is the one we had. So it was 25, 16, 13. That's what we'd be right there. Only a $10. So our 20 deltas would be our short strikes. 91.10. So of course we're not. That was a great trade. But you know what? I still wanted it 12 cents. Let's just see. I mean, I really wanted that trade. Let's go to our curve. So it's going in the direction that I thought it would. Let's just see what happens. Just moving the strikes up a little bit. Same concept, but just moving it up closer to the fire. Because what I'm looking at is getting it in the 88 wheelhouse at the end of December. And let's just see where this chart is. Getting it down to 88. Yeah, so that spike really didn't, man. And it's like volatility for days. Look at that. I still think this thing can go down. I think that, of course, that spike is because of the reports that came out today, because you saw that bonds have gone up today, so TLT will go up today. Yeah, so it's kind of like, am I sharing the screen? Okay, good. I was afraid I wasn't sharing the screen, but so TLT went up today. Yeah, and so anyways, what I was talking about yesterday in terms of because I was going to ask you before I go in, why do you think, when I said yesterday that they're pricing in high volatility after their election? Let's take a look at it again. Pricing in high volatility after, /ES. Why do you think so? That they're pricing it in after their election? Look at this. Okay, if we go to November 5th, 16% volatility, 87% move. So going up to that point is one thing, but the next day, 120 from the next day, from November 6th all the way into damn near January, they're talking about massive, crazy movement, like double what it is going up to their election. They're saying that this thing is going to get buck wild crazy. It's going to get stupid. Why do you think so? Like after their election. Let's go to VIX, the VIX, which it should be up a little bit. Yeah. Look at this. Going into their election, of course, they got, they're looking $3, $3, $3. But VIX, okay, it's not as bad. VIX is a little flat, so that's an okay. It's not as crazy, even though volatility it goes up. But after like December, it's starting to go down a little bit. But December and January. But the thing is, let me see if we could go with the actual futures, because that's even better. But they're looking at massive movement. Because Thinkorswim, I was able to do that before, in terms of looking at the different contracts. Okay, this is 19 by 19.5. Okay, because I know that I could do that I could do that and to see all the contracts. I know I can. Oh, wait a minute. Let's see. I'm not looking for that. I'm looking for. Would they have it under? Because I haven't tried it under Thinkorswim. I mean, I haven't tried it under where I could see all the different contracts to see the contango and the backwardation. The contango and the backwardation, so you could see all the different futures expirations. And I know I thought they would have it here. I know they have it in different futures, VX futures contracts for different months. I can do that in Thinkorswim, where I can see all the different ones going out for, like we've got this contract, and then the December contract and the other contracts. and I haven't tried that here, and it's on which I should have, but on Tasty, but I know I can on Thinkorswim. Yeah, yeah, I know I could do it. But anyways, looking at that, yeah, well, we got a Fed decision. It's possibly a Fed decision, but the Fed decision, remember, after the election. I don't think it's the Fed decision after the election. It's, because that's really, I mean, a lot of folks are kind of sitting on their hands because of it. That might be because of that Fed decision that's coming in after the election. But there's a different thing because you're going into January. So from November, again, even though when I started out saying fundamentals really don't matter, in a ways they do have a way of changing the sentiment that folks are going to do. They do have the way of changing the sentiment. Even though that fundamentals may not matter, they have a way of making people say, think about it. Think about what may happen. Not necessarily, I mean, it's a fundamental thing. Definitely, it's more than likely people's sentiment are thinking that something crazy is going to happen. Something crazy is going to happen after their election. That's what they're saying. Something really weird in the world, crazy, geopolitically or even politically, it's going to happen after this so-called election. So folks are looking at a lot of massive movement. They're pricing in a lot of massive movement. And that's why I have to take the other side of Tom Sosnoff when he's constantly saying fundamentals don't matter. Clearly, fundamentals in a ways are telling you it does matter when you see the pricing of after an election double, like the day of the election you have an 87% volatility, like what 60 what's the movement, the day, and this is why I have to hand it to Brother Victor who's over there. The day after, you have the day of an election, you have, let's go back to there, you have E-mini going up to the election with an $87 move. It goes up more than 40% the day after in terms of the how much market movement. And then it stays that way into January. It stays ridiculously. Of course, you could say it's because of contango, but that's a lot. If the day before an election you have, well, I guess you could say it's about a 40% move before the election, so it makes sense. But the actual expiration stays that way and goes buck wild and just increases seriously stupid into January. I mean, it's ridiculous into January. It's nuts. Going into January, it just gets ridiculously higher. My thoughts, and the reason I'm saying this, is I'm saying you would think that it would, of course, contango makes this thing move. Okay, that it's gonna move because you see it going up, but going like 40% movement, it's the next day. And then it doesn't do the 40% movement going after that, or does it? Let's see, 126, 140. Yeah, it doesn't go 40% after that with each expiration after the election. It goes up, but not by 40% for each expiration. But it definitely starts going up. What it is, Brother Will, and this is something that, that's why I say I want folks to think, because, my thoughts are different. Everybody's thoughts are different. But putting on our thinking caps, after an election, what this is, in my thoughts, are they're talking about January 6th, number 2. In other words, contested election. In other words, recounts. In other words, they won't know the results for 2, 3, 4, 5 weeks after. In other words, this is going to be the most contentious situation. If Democrats lose, it's not going to be contentious. They'll gracefully exit and tell everybody, let's all get along and have peace. If Republicans lose, because it's a crapshoot, it's 50-50 shot. Nobody really knows what's going on. They know that it's going to be so contentious that you might even have, international observers just to see if that election was so-called true, because they will not give up. They're going to fight and make it. In other words, they're saying, look, even if Donald Trump loses, he still wins. Very contentious. So markets are saying, hey, there's a good chance that you won't know a winner of this thing until January, until at least mid-December. end of December. You won't know who's going to win this election. So we don't know where our, we're going to keep our cash as if volatility is going to tell you that this thing, remember elections used to be November 5th. And then if it goes further, like 2000 election, you get the hanging chads and all that. Then, maybe a few weeks later, then you'll find out like Al Gore capitulated and didn't fight for it. Well, this thing is a little different. And they're saying that there's such turmoil, uncertainty in the governance of US that markets are trying to price in volatility after an election, saying we don't know who's going to win. In other words, instead of election being over the week or 2 weeks after, in case there's contested, they're talking about an election being like 6, 8, 10, 12 weeks, like it is in other countries when it is very contested. It's like as if the US became a third world country overnight. And that's what markets are pricing in. They're pricing that in. If you look at the volatility of this afterward, they're trying to price in that, hey, it might be ridiculous. So why do we want to speculate? I'm not telling you it's going. Why would we want to put speculative capital at play and put money out there when we don't even know if this thing's gonna, that this thing's really gonna be over? It may not be over. And that's what I was watching, and I said, wait a minute. These folks are trying to price in, I'm not going to say it's going to be the movie Civil War, but they're trying to price in that, hey, this thing, it ain't going to be over until January. And, somebody's going to fight until January to try to make sure that this thing doesn't go the way that normal, quote unquote, elections go. Or I should say, quote unquote, normal elections go. They're trying to price this thing in. Markets are pricing it in. And I'm watching that going, wait a minute, this is kind of interesting how this works. That they're actually pricing in a major contentious election. They're trying to say, yeah, this thing is going to get ridiculous. There's going to be some fireworks. Somebody's not going to give up. It's too much. There's too much at stake. Now, like I said, Democrats are going to give up fast. They don't fight for anything. Hold on for 1 second. See, the thing is, what they're trying to price in is uncertainty, volatility, and the possibility of a market crash after an election. They're trying to price in that the market, I won't say crash, but I'm saying like, maybe 5%, 7% like off their markets, like in a heartbeat, which isn't like, oh my God, the world's going to end. That's like 500-600 down on S&P. Not even 500. That's like, 400 down in the S&P after an election. They're trying, I mean, it's pretty significant. You lose 400 on their S&P and it's like, oh, what's going on? So this thing might be priced up into the 6,000 range because they're looking at an S&P hitting 6,000. Okay, because that's like right around the corner. I mean, that's like, a melt up like you've never seen before. But they're pricing in that this thing is more than likely going to, like, it's going to be like, hit 6,000 and then crash. Like, I'm not saying it's going to happen. Hit 6,000 on S&P and then fold like a cheap suit. Just like melt. Just fall like there's no tomorrow. Because in other ways, I think they're pricing in a Donald Trump win. Because I'm not saying it's a guarantee, but more than likely, because of a regime change into something more of an uncertainty. He's talking tariffs. He's talking protectionism. He's talking tax cuts that are, they can't pay for. He's talking, you've got the end of Joe Biden's Inflation Reduction Act. You're talking so much uncertainty that I think markets are pricing in Donald Trump winning. In other words, you may see 6,000, but shortly thereafter, it's going to lose possibly 10% of that back down to 5,200. Okay. And possibly even further, but more than likely a 10% correction. So I see that. I'm not saying it's going to happen. I'm thinking that, even though they say that markets will go up because of, Donald Trump's business friendly, but you're in an environment where inflation, if he's business friendly and hands more benefits to business, it's going to hurt the taxpayer because the businesses are going to go in and say our margins are still compressed. So we're going to pass those costs on because they're already passing costs on to consumers that can't pay for it. So anything that consumers needed in terms of benefits or in terms of of relief, inflation relief, is not going to happen. And so that uncertainty is breeding itself into it's moving itself into those markets where markets are saying, do we really want to take risk putting speculative money out there because Donald Trump is getting in office? We want to wait and see what the impact, even though it's business friendly, and especially in a geopolitical note, because elections aren't just impacting the U.S. It impacts one major word, China. That's going to be very significant because now all of a sudden, because China has been going through a lot of problems, not like they're going to collapse, but they've been going through some major problems this year. Having that on the docket, and they're the major supplier and manufacturer of the world. Everybody around the world is going to adjust, because of, hey, how's that going to affect our margins? So it's a geopolitical play as well. Big factor. Yes, China. Then you got Europe that is significant, trying to increase its China partnership because of Donald Trump's anti-Europe stand. I mean, his stand against Europe. In other words, they're going to have to come up with more money because the moment that somebody becomes more protectionist, everybody else that depends on him is saying, "Hey, he's going to leave us out to falter because they got to take care of themselves. So we're going to have to do something to take care of ourselves because that individual does not have our back." So you got that factor. So I mean, this is definitely going to be something to keep an eye on, a major eye on this. It's going to be, so you still have a flat market pretty much. The markets are flat. So I'm looking at this saying, wait, somebody's trying to tell us something. Somebody's trying to tell us that, hey, there's somebody's trying to price in, not saying it's a guarantee, but they're trying to price in the probability of a Trump win, number one, and of a market crash, number two. Now, I'm not saying it's going to happen, but I'm looking at that saying, that's something to keep my eye on. With the volatility spiking like that, that means when you see volatility spike, that usually means a market crash. Looking at this, let's see if the only thing that I wanted was that TLT trade. And I really want that, but I don't think that, it's just not happening. I really wanted that trade. Okay, we're 10. So let's go to 12 cents just in case. Just in case it wants to get back down on us. I mean, it's just not feeling. And I really want that trade. There's enough contracts, a lot of liquidity. Like I said, liquidity is the first thing you look at. Liquidity is first. Even though, okay, I'm trying to get in there. We'll see if it'll fill. But so that's what I'm kind of looking at. Let's see if there's any other opportunities in terms of, okay, IV rank, other than TLT, man. That's the one I want. KRE, I really don't want. I'm glad I didn't take it because KRE, I had a trade, the Iron Condor I wanted to get into. That was a while back. KRE, the one that we were looking at getting into. And I don't want to take too many Iron Condors before an election. And this is regional banks. This is all your regional banking. This is the trade that I had. I was trying to get it for 120, and I'd be down like $9 had I gotten it for that trade. So it's great that I didn't take that trade didn't come in, because I'd be down by about 10 bucks in that. And that trade, again, if it was a strangle, I wouldn't be as freaked out. But being an Iron Condor of a very, I won't say, no, it's a little higher price, not terribly priced. Again, more risk to the upside. Regional banks were going up. There you go. Risk to the upside, regional banks going up. So they still see risk to the upside. That, and I don't like to be super directional on selling volatility. Like, okay, let's sell puts. It's still volatile. Look at the volatility. It's 86% IB rank, 30%, 39%, 40% volatility index. So it's definitely still high. The volatility is still, still definitely something to not shake a stick at. XLF was the other one. XLU is still kind of, XLF is not much. It's not like a lot of volatility for me to go ahead and say, oh, I got to take this trade. It's one I was looking at, and I think it's, again, it's banking, so I'm pretty sure you're going to see risks to the upside on this. On XLF, of course, it's ranging, going up a little bit. If I looked at the strangle on XLF, I would be looking at XLF. I'd be looking at risk to the upside. Let's go to 16 deltas. 16 deltas. Okay, 18's close enough. 18 deltas on that side. 21 deltas on this side. I mean, it's not really, it's kind of hard to tell because we've got those 3 deltas, but just looking at the slope, even if we move this out to 13 deltas, the slope is just, risk to the upside. Major risk. The difference between the expiration and the theoretical is just wide. I mean, that distance there is a $127 loss. The difference here is 80, so it's damn near 40% less. It's at no, that'd be, is that 20% less? Yeah, 20%, not 40. 20% less. So that's something that I would definitely be kind of, How about my airline trades? Airlines, 56 IB rank. Let's see what we got in terms of volatility. It's gone up a little bit. Volatility, IB rank. And what's our IB index? On I like this airline. I like airlines. Let's see. No, I keep saying airline. Alcoa, or aluminum, and I'm thinking this is AAL. This is aluminum. I still kind of like my aluminum. Let's see what we got here in terms of the strangle. I don't think we're going to get a lot of premium on this though. 18 deltas. Yeah, there's no strikes. There's no 16 delta. Oh yeah, I mean, I was going to say there's no volume. 18, 16 deltas on our strangle. It's not great. You're not getting a third of it, but you're getting some. Max profit. I mean, it's not incredible. You're getting paid $3 a day, which is nice. I mean, the probability of 50% is good. Probability of profit. I would like to get more than just $1.31 on $4. Because remember, you have those overnight margin, the maintenance margin on naked spreads. You have a maintenance margin, and that's something that you really, really got to you really, really have to take into consideration. What would the worst case? Let me see where do I find this? Let's see if I could find it. I don't think they have it in here. Yeah, let's do this. I want to see what our C-bar is. Worst of the worst of the worst cases. When I say the worst case, it's basically if the world explodes. Like, in other words, this is showing that at the very, very worst 5% of the time, it's like only 5% of the time this would happen. And that's what I want to see. So let's it's like saying, okay, this would happen only, I mean, it's the rarest of the rare, but let me see it would be a $900 loss if it was a black swan. The worst of the worst of the worst cases of worstness. It only happens like on the fat tails. So that would be a literally about a $900 loss in this trade. And that's only would happen 5% of the time. That's pretty, for $400 buying power. That's 1/10 of the. That's about a little bit, like 10% to lose that much. That's a little scary. And that's if this crashes, and you get margined out. It's saying, look, man, this is how bad it could get. 5% of the time, conditional value at risk. Um, and I mean, I like to look at that off and on just to kind of see, okay, what if? Let's see what we got here on American Airlines. I love the airlines; they've been doing me good for about a year. Um, so we got IV index 46. That's good. IV rank 39. I like that. 5-day change is not really a full percentage, but 0.7%. I don't mind that at all. That IV change. I don't mind that. Let's see what we got for strangles. See if there's any opportunities, because I'm looking for opportunities every day. So I don't see any contracts here. We've got the 33, and then we've got 20 deltas. There's no contract. It's not trading. There's no bids on that. Nobody's even looking at that. No bids and all. I mean, there's been an offer, but there's no volume. 50s. Yeah, here we got 51 cents. The worst case scenario on that would be like $300 on that one. So the CVAR. Worst case, the 5% of the time, should the market just kill you, you're looking at losing the amount of the buying power effect, whereas the other one was worse. Let's go to Boeing, because Boeing has been getting destroyed this whole year. But I've been doing okay with airlines. Look at Boeing, man. This is Boeing. It's just all year. It's just been destroyed. American Airlines has been. Look, I mean, this would be a great trade, a spread trade. This would be a great, incredible spread trade. Go long Boeing and short American Airlines. And if we did the notional, we would have to go short 3 American Airlines to 1 Boeing. Because where's Boeing stock at? Boeing is at more than that. We'd have to go, and if we wanted to, we'd go like 8 American Airlines to 1 Boeing. And what are the options on that? If we did that, an option spread on this, do a spread trade. December options for Boeing or for Boeing are they're trading at $9. So $9. So and American Airlines, we're trading at, our December options are trading at, let's see, and you can tell the liquidity in this thing is like very meek, because there's no weeklies, and that's, so we would have to go with 10 contracts of one, close to nine contracts to 1 Boeing, but I would go long, or one Boeing, and short, or short about 8 American Airlines. That would be a cool pairs trade. That would be, just to see. I would never do that, but just because, I mean, because American Airlines is going to pull in, and Boeing is going to go up sooner or later. And to do that as a pairs trade would be a really cool trade. Just to see, because the spread is just ridiculous on those two. I mean, it just looking at that, they're just so far out of bounds in terms of, one's been going up an entire year and one's been going down the entire year. Sooner or later, they're going to converge. They're airlines. I'm looking at the ARB on that. I'm just saying that would be a really cool, funny trade. I mean, I wouldn't do it on something that is short term. That would be a medium term type of leap structure type thing. But it would be a cool way to say, hey, what if? What if you went long Boeing and short American Airlines? The spread would be just insane. It'd be insane. Let's see if we could go to their pairs trades and go. Let's see if we could pull up a chart on that Boeing, long Boeing, short AAL. Oops, Boeing. Let's see. if I can go short. Okay. That's Boeing. See, I'm trying to do long Boeing. Okay, we did Boeing. Now let's go short. I wonder why I can't do that. I wonder why. Boeing. Okay. I don't want to go with the futures. Go with stock. I wonder why I can't do that. I have to, because I haven't done pairs trading on this. Okay, Boeing, yes. Because I didn't hit it. My bad. So let's see. So let's switch this. Long Boeing, short American Airlines, and we'll go. No, we'll go 10 contracts, minus 10. I want to see if I can get a chart of this. Yeah. So long Boeing, short American Airline, 10. So Boeing, long 1, 10. That's your chart. Okay. So I'd be going, so I mean, because Boeing, let's see, that would be the chart of, minus 10 AAL. Boeing 1, 10 AAL. Let's go 9. Let's see, we'll go 8, minus 8. And let's look at a chart of that. Wow. So that would be, so if on the regular, if we switched it, this is what, so I'd say that spread should come in. That spread should come in. That would be a really good, a really interesting change that I think that this spread would turn around because it's just so ridiculous. Because Boeing has just been destroyed. So I would think that American Airlines would go down because because if I do a 1-to-1, let's go do a 1-to-1 and chart it 1-to-1. Boeing has just been destroyed. So I would think that Boeing would go up against American Airlines. And I think notionally, because Boeing is 154 and American Airlines is $13. So notionally, to equal those, it would be 154 to like 130. So I'd maybe 11 contracts of American Airlines, so that way our notionals are kind of close. That would be a really cool trade for a longer term because look how long it's not something that's going to turn overnight. It's not something that I would look at that's going to, it's going to turn overnight. But if you look at that, Boeing has just been destroyed against American Airlines. So I would play the spread going to the other side. So if I were to do this to trade it, I'd have to go minus 13 maybe. 13 in order to get my notionals happening. Because that would be, I mean, that's if I did a pairs trade. That's interesting. I'm just looking at that going, that's an interesting pairs trade. It's like Forex, basically we're setting up our own Forex trades where we're using stocks. But anyways, let's get back to American Airlines. American Airlines, I mean, it's not really, I mean, you got, what is that? The deltas, or the probability of profit is 50% that you're going to make. I mean, probability of your 50 of profit is 83% of it getting 50%, 68% probability of profit. You get paid $1.20 theta. Deltas, your little delta short. So, I mean, it's not like, the do all say all. You're just a little bit short deltas. Max profit is only 50 cents. It's 1/4 of your buying power. I can't do that. I mean, for something that low, 50 cents, you're barely covering commissions. I mean, you're barely just, you look at your, again, it's you're a little bit. So if you're going to look at your skew, I mean your delta, your short deltas. So you have a lot more skew to the upside. That's if I did that. But if I go back to Boeing, if I did Boeing, let's see where we're at there for December, 51 days out. If we go down to 16 deltas, that's 15. That's close enough. 16 deltas here, you got a lot of liquidity, except you're 1/5, less than a quarter. And do I really want to spend, $1,500 of buying power? Your CVAR, you're going to lose 2,500, so you're losing almost 10%, about 9%. Should this thing, worst case scenario of the worst case scenarios? That's all I'm looking at. That's why I've got to hand it to Tasty Trade. When they put that CVAR value, your worst case scenario is $1,000 of, almost a little over $1,000 of your buying power. The worst case of the worst case. Now your buying power it's not gonna. I mean, you're going to be margined out, but it's just like, because I always look at overnight margin as well. How bad can it get? Now, if I did this as an iron condor, I would do this. Say if I did it as a $10 spread condor, even though I don't want to do condors before an election. If I even did this as that, then of course our buying power and our CVAR are the same. That's $800. I'm getting less than that third of the width of the strikes. So it's not worth it in terms of, you're getting less than a third of the width of the strikes. You're not getting a lot of premium for this. Even if I tighten up the strikes, 120 at a 3, it's close. 120 almost at a 400. You're not getting that, but still yet again, your CVAR, your worst case scenario, adding commissions are basically the same. You do have an 84% chance of making 50%, 70% chance of making the whole, at least making a penny. If we look, we are definitely skewed. Let's see where our skew is. I think we're skewed to the upside on this, on Boeing. Let's see where our skew is. Okay, let's do this. Where are we at, Boeing? Where's our iron condor graph of our theoretical? There we go. So looking at our skewage, no, it's a tiny bit skewed to the upside, just a hair bit. It is, actually you're skewed pretty well. You've got on your expiration. I think this is the one. Yeah, this skewed pretty well to the upside. It's an okay. It's not like ridiculous like the other one we saw the other day. That's 117 over there to theoretical. Actually, no, we're skewed a little bit to the downside. If worst case scenario, if this thing went down, it's 119. Worst case scenario, if it went up, is actually we're skewed to the downside, just barely. 107, theoretical 107. So yeah, it's a little bit, it's not like the terrible. If I did this iron condor, I would have to do it at a higher price. And I'm seeing these prices move like crazy. So there is some volatility coming into this thing. There's something that's happening. This is up 116. So it's up 1%. A little bit. Let's see. Boeing is up 1% in terms of today. Let's just look at our net change. So we're up, about 1%, 0.92%. So it is, it's moving a little bit. Boeing, and when I say it's moving, it's just look at the option prices going from like 113 to 120. It's telling you that this thing is in play. There's some movement happening. This thing has the potential in the last 21 days. I always double it, saying that this thing has the potential to move $8. And of course you had earnings, so it went from 153 to 160, about 159. So there, since that because I believe that was earnings. So, of course, this thing has the potential, even though it's going back down after earnings, it's getting back down to where it was at, basically. Clearly, Boeing is definitely not wanting to go up. I guess those problems are still nagging them. You've got 55% implied volatility. So and the IV index is still up. So I'm gonna keep that in the wheelhouse. It's just something that I may want to trade later. I'm gonna definitely look at Boeing. But anyways, brother Will, just giving you kind of a little heads up. That's something, in terms of opportunity. You know what? Let me see if there's anything else before we head out of here. Anything else that I'm looking at, because I really want to get more trades on. And Delta Airlines. I haven't done Delta in a while. Delta Airlines. Yeah, because Delta has done me real well. I've been liking Delta for like the last year. Let's see, the last 2 years. Yeah, Delta again. Delta, you could do a Delta spread or an American Airlines spread against Boeing. I mean, look at that. That's just nonstop. Those are some cool spreads. The other one I was looking at is, see, I'm not really into Pepsi and Coke, but after those layoffs, I was just kind of curious. They closed that one plant over in Chicago, and I was just kind of curious. Let's see, EWZ. I don't have any trades on in emerging markets except for FXI, and I was trying to get into Mexico. 57.27 and IV index change is up 1.6%. Let's see. What do we got here? Okay, let's see what this thing is moving. It's kind of ranging a little bit. I've implied volatility's up. It has about $1 easy. It can move $1 easy way, either way easy. Is there any? Because last time there was no liquidity in terms of something that I would want to take a trade in December. Is there any liquidity that I could take a trade in December? Was it that, or was it I wasn't getting enough premium? I think it was a premium because it does have liquidity here. Let's see, skew to the upside, definite skew to the upside. 47 out of, yeah. So I'm not getting paid enough for this. I'm barely getting paid in order to put this trade on. Even if I pull, yeah, this is barely paying any money for this strangle. So I would have to look at something different. Since it has been ranging, see, it's a ranging trade, so I don't want to roll the dice on whether it's going to go up or down. Even if I move the strikes to 25.30, if I move the strikes to 25.23, strangle, I'm still not getting paid enough for it, for the buying power. The CVAR and the buying power are cool, which means that chances are you're not going to be hit with that overnight margin too much. The maintenance margin is not going to kill you. Because remember, naked strikes, you pay more for maintenance margin. Let me see if I went and did $5 wide wings to condor this thing. Yeah, there's no options being traded there. So, even if I wanted to, if I made this a 30.35, there's no trades happening in there. 92.379, you're barely getting a third the width of the strikes. So, and the skew in terms of the mountain should be pretty steep. If I were to do this, yeah, it's a pretty steep mountain for a trade like this. If you go to this, you would be down 50%. If this thing hits your short strikes, you'd be down 50% overnight. You would lose that credit, that 50% credit, because it would be down. Or no, I should say no. You're down about 1/6 of your buying power, 50% of your credit, 1/6 of your buying power overnight. If just because look how close look how just the risk factor, and you're not getting paid for that risk because we're at the 23 deltas, 20, 22, 23 deltas. I would like to see more credit there than where it is. So that's EWZ, EWW. Those are your what's the name trades. So I'm just kind of like on that one. I already got metals, and I don't want to get more metals on retail. See, retail, I could go to retail, XRT 55.25.4, which is okay. It's not like where has this thing been going? Retail stocks been ranging a big range too. Look at that range in the last month. It's just huge. I mean, in the last month of a range that you have, um, 73 to 78, $5. So you got 10%, almost 10% of your stock price has been ranging in the last 2 weeks. So, so I mean, but volatility, is still not like stellar through the roof. It's been up before, which I like. But this thing can move like over $2, about 250 easy. Um, but it's not giving me third the width of the strikes. Let's check it. But I don't think I'm gonna get a lot of volatility on this. There's nothing being traded there in December. There's no contracts. If they had contracts, it would be nice. Even at 23 deltas, you're only getting 1/10 the buying power. And there's no way I could take a trade with 1/10 buying power and no contracts. So XRT's out of there. I mean, these are things that I would do directional, but not for December's expiration. I would probably do it somewhere directional in a short term. And there's really no contracts even on this for November. There's barely any contracts. So XRTs, that's definitely not something I would really trade. The retail. Um, let's see anything else that I see that possible. I mean, there's some stocks out there. The airlines I kind of like, but more for like a Paris trade. Stocks wise, TSM, eh. If you ever get a chance, get cherry picks from Tasty Trade. Their cherry picks are very cool. Tom Preston. I mean, that dude. They call him TP. I really dig his analysis. Tom Preston. Um, Even though I don't trade him, I just like the very simplistic analysis that he has. Very simplistic. You just get in a set of rules and you just keep going. You just keep going. From trade to trade to trade. He also does a Saturday. I think it's either Saturday or Sunday morning broadcast. And it's very simple. Very 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 simple trade. And it just gives ideas. It's not something you would a puppet trade because I can't really do too much puppet trading. Okay, I've got an expiration coming. Who is expiring? Okay, who is expiring soon? I've got an expiration coming soon. I got some trades on it. I can't remember. I know it's not that. Is it FXI? FXI December, SLV December. Okay, it should be this. Is it EEM? December EEM. November 15th, XSP. Oh wait, XSP. November 1st. That's the one. So XSP is coming soon. Yeah, because that's right. I did the November 1st. XSP. Yeah. I'm a stick with this. I know it's a 65 cent. We've got, when is that? A couple days from now. 65 cent. You know that in other words, volatility hasn't gone where I thought it would because that's expiring in a couple days, and it's not an index. It's just a. I was thinking things would be volatile by then, before November 1st. Eh, this is the one we put on the other day. We'll just go ahead. Let's see, what are we getting paid on Theta? We're getting $4 a day, and no, we're getting hurt. Let's see, what are we getting on Theta on this? We're making what, $4 a day on Theta. So it's kind of like, eh. I mean, no, we're losing. Excuse me, losing on that Theta. Do I really care about this trade? It expires in what, 3 days? It was my downside calendar that I thought that this thing would possibly go to the downside. We do have non-farm payrolls coming in. We do have what else is coming in this? Yeah, this was my directional one I put on yesterday. We got non-farm payrolls. What else do we got going on? We got who else? What else is going on? I'm thinking if I, because I was looking at the interest rate decision. Eh, we'll go buy Sheila on this one. Buy Sheila. I was thinking that, well, yeah, we'll just say buy Sheila because I mean, I could put on another calendar. That was that. So we're basically break even on that. Commissions. That's basically all it is. Commissions. Yeah, because I could stay in it, but then I was like, 65, 70 is break even. So, anyways, so we're gonna do it again, redeploy, because I really want to take advantage, but I might do a 9-day calendar instead of just the one we just did. That was a really short-term calendar, and Thursday was my wheelhouse of getting out of this trade. But I'm gonna do a longer one just because I saw that volatility going up into next week, and I like that. Just the fact that ridiculousness of volatility from next week, and that was what was that, the 578? It might be even cheaper because of the fact market's moving up a little bit. So if we did that, the 578 instead of if we went to the 578, sold the election, and bought 3 days later, sell the election and buy 578 3 days later, it's a little bit more expensive than I want. A little more expensive. So I'm not willing to spend, I mean, this is a major gamble. Again, I'm thinking market could fall if I sold the election and did this. What would happen if I went 2 days out? If I went 2 days out instead of 3 on that, nah. Yeah, it's just an election day trade. I'm just trying to figure out, trying to get a real cheap calendar going in. But no, I'm not going to get it cheap. What would happen if I move these to the next? It's a little cheaper, 144. Do I really want to spend that kind of money on this kind of a gamble? This is post-election, 144. We're only getting paid 56 cents. Was it? No, we're getting paid $9. I thought it was 0.50 cents. So we're getting paid $9 a day on Theta. I'd be tying up a lot more in terms of this. So if we made it an 8-day calendar, November 7th, November 12th, we'd be getting paid $11 a Theta. $5 between the strikes. So in anticipation of more volatility between now and then, which means a market falling between now and then, getting paid $11 in Theta a day. But that's going to change on you because markets can go around. You know what? I don't mind that. Let's see if we could pay a little less for it, though, just to see if the market will come to me on this. Will it come to me? Come on, come to me, market. Like the song, "Come to Me." Let's see if we can do this. See if we can make the market come to us. Okay, mid is at 7. I'm gonna see if I can get filled for 84. Just to see if it happens. I'll monitor this trade. I got it at a very low price. But let's just see if it'll happen. If that market could come to us. In other words, the higher this goes, the more the market should come to us in terms of the price. The higher the stock goes, the cheaper it should get for this trade. And I'm coming in 3 cents underneath. I kind of want this. I don't mind this at all. To look at our curve, again, it's a speculative trade. So we're underneath the market a little bit, thinking that this thing can drop just after the election. Again, my theory of more volatility coming in. So it's up here, and I'm thinking this thing could drop. They're looking at least in terms of a move, that this thing can move $16, on the 12th. Let's go to the 7th, because that's when our trade our trade is on the 7th. So they're looking at this thing. Let's see, 8, 7. So they're saying this thing can move $14 easily, up or down. I don't want to be in this trade. So November 7th, I would like to be out of this trade Monday at the latest. So between now and Monday, which is the 4th, if I got out, or the 5th, no, this actually, I'd have to be out of this trade on the election. So nope, Monday. So this is a $7 move either way between now and Monday. They're predicting a $7 move between now and Monday. So if they're predicting a $7 move between now and Monday, and I've got this trade at 578, that's about, let's see, 84. That's right in the wheelhouse of where I think this thing would be. I am long a little bit of deltas. So if we looked at our expiration, or I mean our theoretical curve, it's definitely, where our theoretical is at is definitely in the wheelhouse within that of making some profit. Now keep in mind, as this thing falls, this gets bigger, and then this gives you a little bit, your mountain gets bigger, because you want him to be inside of this mountain. We're buying volatility, so you want him to be inside, not on top, but inside the mountain, because it's buying volatility. So this mountain would get bigger. It's like an umbrella, and it would cover him from the rain of you know what? I like this. Just to tweak with it, just to play with it. Since we're at 89.84, let's go back to 86, because I really want this. I don't mind this trade, as a buying volatility trade. I don't mind this. We might only make our, hey, KW, good to see you, KW. We might make that little bit of profit like we did, the commissions, but I don't mind this at all. I don't, it's kind of crazy. I'm at 86, seeing, we'll wait here on 86 for a minute and sit on this, because I want this. I want this trade. I do want this. Yeah, because I'm looking at that. Anyways, on the let's see, what is this all about? Okay, so that was Komodo. Something's weird on this. Okay, why that cannot? This is just weird. Why this does this? But anyways, let's see what we got here. Okay, I'm just looking at something. Yeah, okay, that's cool. But Tom Preston on his cherry bombs are some of the coolest things I've been watching. The cherry bombs that he does, he's on Tasty. I've been watching his stuff. He's looking at J.P. Morgan. J.P. Morgan Iron Condor. Okay, J.P. Morgan Iron Condor. IV rank 45%, 25% IV. Wow. A 205, what is that? The 210, the 210, okay, a 210, 240 Iron Condor and JP Morgan. That's what he's got going on. How many days to expiration? He's doing it with the December. So 210, 240 iron condor and JP Morgan. Let's take a look at that on JP Morgan. 210, 240 iron condor. I just really like a lot of his analysis. I would never take this trade, but December expiration, 210, 240 iron condor, and he's doing $5 strikes, which is basically it's a binary thing. Let's see. Okay, you're getting paid $2 a theta. You do got a third the width of the strikes. You got $2 a day. You're getting paid 71%, 51% probability. This is cool. 71% chance. This is a very cool trade. I just don't like putting this on before an election, especially that they're looking at Jamie Dimon being in Trump's cabinet. This thing can move $8 either way easily. It has been ranging. It could easily move $8. If this thing moved $8 either way, what would that look like? $8 either way. If this thing moves, let's get our mountain up there. And so 320. Let's see, 224. So if we went down $8, what is that? 216. Yeah, we'd be down about $60. So let's say around 224 and went up to 232, we'd be down about $50. So there is some skew happening to the upside. You can tell, again, it's definitely some upside skew to this. If we went and hit our short strike over here, we'd be down theoretically 82. Down here, we'd be down, if we hit our short strike down here, 82. No, actually, it's pretty close, actually. Pretty close skew. I don't mind that. Pretty close. Looked like there was some, skew to the upside. No, it's kind of close. Little, yeah, it's close. The skew is not, maybe a tiny bit of downside. So it's not as bad as I thought. You are getting a third the width of the strikes. I like this. I just don't like doing condors. Like, especially you got non-farm payrolls coming out. And if it comes, and chances are banking, will spike on this. Ooh, it's a good trade. It's a good trade. It's a really good trade. Tom Preston, man, look at it. Dude has got a really good trade out there. We could see how much would we make if this went back in expiration? Let's check that out. What's the probability? So if we went back 2 weeks, December to December 6th, we'd be up nicely. We'd be up, we made $30 out of that 170. What is that? What was our credit? 170-ish? Yeah, 175. It's not bad. Not great, but it'd be done. We would make $40 in that. Let's go back, let's go back 3 weeks. You would definitely be making about 40%. Or 30-some%, maybe. So that would be 60 out of that 170. So about 30% of this, a little over 33% maybe, in about 3 weeks. Okay, that's if all things being equal, and just all things being equal, that's what is more than likely looking at. So I'm not mad at that trade. Yeah, oh my bad. We did have skew to the upside just a little bit. I wasn't using per IB contracts, but that's the only crazy thing sometimes is that per IB contract. But we're looking at that's an interesting trade, an interesting, nice trade. If this thing popped to the downside, you wouldn't be getting hurt as much as if it popped to the upside. Even though this mountain will kind of move with you a little bit as volatility goes down. I like this JP Morgan. Tom Preston. God dog it. Thank you. I do like that. Let me get back to this other trade because I really want to get filled in this. And this is okay. It's up at 90, so we're going to go back to 87. You know, I'm not going to chase this too much. The our XSP, yeah, it's coming down in price, so of course you're going to pay a little bit more because now the market is going against us. When I say going against us, yeah, it's just the timing and is of this trade is what I want. I do want this. We do have contracts, so we shouldn't have any problem getting filled. It's just I'm trying to get filled underneath the market, and I'm gonna see if it'll pull back to 87. I'm not going to go to 90 cents. Now it's moving against us. As you could tell, as it's coming down in price, it's going up in price of what we need to pay for it. And I'm at 87. You know, I'm being a dick for a tick. I mean, it is what it is. TLT is just, I mean, it is does not want to feel. I've been trying this trade. I really want this because, you know, I'm looking at, you know, you got non-farm payrolls and you don't have, and you have an interest rate decision, which will most likely cause that market to go up a little bit. So you're going to make your $12. But the thing is, you have the possibility of, you know, of, you know, really making some good, you know, if that thing pins. And chances are it's not going to pin. But if it does, you do have a possibility. Anyways, yeah, you know, but that's my theory in terms of where things may go. You know, Brother Will says, oh, yeah, okay, yeah, yeah. So, anyways, yeah, I'm just kind of looking at this, you know, just for the next few days to see exactly what could or could not happen, you know, or what may or may not happen in the next few days for a trade, you know. So, anyways, XSP we're trying to get filled, and TLT we're trying to get filled. So let's see what happens. Hotep, y'all take care.